Hey traders, Raghee here, and in this Simpler Futures recap video, we've got a lot to go over here, and I want to just make sure everybody knows that while we did have a tremendous amount of follow through in a number of positions that we've been patient with, in some cases dating back to Friday before the weekend, we are hitting levels where I need you guys to tap the brakes. And I'm going to show you how to do that here in this video, the process, the levels, and what we're doing next to manage these trades. So I'm going to start off with copper. We've been talking about copper and sympathetically an equities name that's very sensitive to copper, and that's Freeport-McMoRan, FCX. We have been looking for a re-entry, but the thing to remember is a lot of times traders get very focused on entries and they just downright ignore or just stink at the trade management. And I'm going to use a golf analogy because my dad taught me how to golf very young. He was hoping I'd be a really good golfer, which I'm not too shabby. But everybody wants to drive big off the tee. That's what everybody wants. They're swinging this Fred Flintstone-sized club head at the tiny white ball. The truth of the matter is, it's the short game that wins the tournament. It's the short win. It's the short game that, beats your buddies out on the course. And that's why I beat a lot of the guys I golf with, because my short game is tight. I can't drive as far as they can, but I'll beat my husband on the course, and he's a big guy. So short game to me is equivalent to the trade management, the risk management aspect of trades, not just the entries, right? Entries are fun, and that's where the excitement is, but who says trading has to be boring? I know that's what they say, but they also say trade with no emotion, and who the hell does that? All right, so let's take a look at the copper market here. This is an entry that we took, and it's continuing to move higher in our favor, which means tap the brakes. Once we hit the initial profit target, there's a couple things that happen. One, take anywhere from 1/4 to 1/2 of your position off the table. That doesn't mean you're flat. That means you've taken half up to half of your lots, shares, contracts, whatever it is, and you've moved to a break even. Typically the break even we utilize here is going to be about 3 to 5 ticks or 3 to 5 pips, depending upon the market, below your entry. Not at your entry, not a true break even mathematically, but representative of if the market were to come back to my entry, I would think there might be support there. So I don't want to be flat if we get back there, but I want to prevent the market from moving against me too much, and therefore letting a winner turn into a loser. That's the cardinal rule of trading we could never break, right? Never let a winner turn into a loser. So how do we now navigate the next entry in copper? Well, we set this up in the chat room. 60, 30, 120. 60 and 30 intraday shorter term. I think the 60 did an all right job, but once we started to see this kind of sell-off in copper, you just know the 30-minute is not going to be able to handle the 0.021 hourly price movement range to 0.040 to 0.005 daily. It just is ill-equipped to handle the shock, right? It does not have good shock absorption. So you could look at the 60. That was a little touch and go, but the 120 for sure triggered the trend follow, and those are the 3 time frames we kept an eye on for the trade. So a lot of people ask, well, how do we keep up with that shift? Well, if you see right about the point your 30 is losing validity, the 60 could be a decent entry. You can start to either go ahead and take the loss in the 30, right? Limit your loss, rebuild it on the 60, or just rebuild it on the 120. Just shift to the longer term time frames and build a position there. This kind of move, that dramatic move on that 30-minute chart, will typically get you beelining for that 120, because as we bottomed out at the 2.9870 level, let me show you here, 2.9870, well, here we are, 34 EMA on the high. That's pretty much a perfect swing buy on the 120. So you can see what the lows are presenting, and you'd pretty much just leapfrog the 60 and say, okay, just give me the 120. There's my swing. All right. Okay, so that is the copper market. We had, from the recap video, we were looking for the short squeeze, and boy, did we get it. We got every one of our end of day and intraday time frames working, whether that be even something like the intraday squeeze we talked about on Nikkei, which, I said, hey, let's wait for the market to start accelerating later in the day. Nikkei didn't look all that fun through 4:30, through 4:35, but like I like to remind the traders, Nikkei is an Asian session market, so I don't mind seeing movement for 5, 6 p.m. Eastern, because that's the very, very, very early stages of the Asian session. Here this market is following through about 170 points in our favor. Not too bad. Not too bad. In the meanwhile, NASDAQ and Dow put on a heck of a show. They followed through from their respective, arguably oversold levels. Again, the market had discounted so much negativity, and it's not just the negativity, and it reached oversold levels. So we had this psychological fundamental reason for exhaustion, and then price chimed in. That kind of dovetail, when you do get that, don't ignore it. Do not ignore it. But here's the caveat. Keep an eye on the 5-minute chart here, gang. Yes, the Nikkei is strong, so I think it's going to pull the Nas up with it. But 58.80 is a very exhaustive level. It's a midpoint exhaustive level on the daily, 58.75 to 58.80, which is the minor psych. So keep an eye on the 5-minute. We could get a wave rollover. And when you're looking at a choppy market on the daily, just don't be surprised when you see the market head up really strong one day and head down the very next. So the reason I mention that is if you have not paid yourself from 3 different entries we could have taken on this market, please do so. Don't be double mule up here. It's a great win, even from the 58.08 entry up here, 70 plus points. For many of you, this is a fade from the daily that we took down in this area. Some of you got the 57. We basically were looking at 57.65 to even 57.75, 57.85. Very nice follow through to the upside here from this move. So pay yourself 58.80 daily midpoint, and then we'll see how high is high, if at all. For those of you that want to keep a really tight leash on this, use a guidance trade. If the market crosses down below 58.74 on the 5-minute, yeah, that's a really tight leash. I get it. But if you want to just not risk too much more, we haven't broken the 34 EMA on the low yet. So that's a great and tight guidance trade. You want to give this market a little bit of leeway? Yeah, go ahead and step out to the 15-minute time frame. Use the hourly PMRs we talk about. I'll talk about that more in the premium video. This is a pretty beefy recap. No fluff in these recaps, gang. So I hope this is helpful, and I'll see you in the next update.